Welcome to The Call. I'm Jay Sapsford. This week, we're all about the dollar. The greenback still dominates global transactions and remains the reserve currency of choice. But the dollar is seeing some erosion of its global supremacy. Since Russia's invasion of Ukraine, more countries are reducing dollar reliance out of fear of becoming the target of dollar-based sanctions. China is perhaps the most aggressive. Beijing is using the yuan for cross-border payments, developing new settlement systems, and embedding its currency in global investment flows. All of which raises the question of the moment: is China coming for the dollar? In his new book, today's guest argues that dollar dominance was never guaranteed, but the risks are now growing for an accelerated decline. Joining us now is Dr. Ken Rogoff, Harvard professor, former IMF chief economist, and author of Our Dollar, Your Problem, an insider's view of 7 turbulent decades of global finance and the road ahead. Ken, welcome to The Call.
Thank you, Jay.
You warn in your book that the dollar's dominance was not guaranteed. This year, the dollar's been selling off against virtually all major currencies. Is that a sign that the decline is happening faster than anticipated?
Well, frankly, not so much. I mean, I think the kinds of things I'm writing about mainly in the book are slow. They're happening faster. I also write about the fact when an exchange rate's really out of line, when it's really expensive, and just in some simple way, comparing, what it costs to go to a restaurant or hotel in Japan versus the United States. The dollar's really expensive. The yen's really cheap. So it's very hard to predict exchange rates. That's been part of my life's work. But when they're this out of line over a couple of years, you can expect some adjustment. I think that's the main thing that's going on.
Okay, so when Nixon took the dollar off the gold standard in 1971, our European allies were worried about inflation devaluing their treasury holdings. And Nixon's Treasury Secretary, of course, John Connally, famously said, "Our dollar, your problem," the title of your book. In the years after 1971, in those high inflation years, what happened to those European holdings of U.S. treasuries?
Well, they got debased a lot, and Europe's no longer part of the dollar bloc. They have the euro. They broke off. But what happened is all these countries, particularly China, which weren't globalized, entered the global system, also the Soviet Union, parts of Latin America, Asia, and they adopted the dollar. The dollar effectively colonized a large part of the world. China's at the center of it. China's decision eventually to peg to the dollar has really been what's turbocharged the dollar over the last couple decades.
Okay, the dollar today is backed not by gold, but the sound monetary policy of the Fed. But your book warns that we are at risk for another era of inflation. What do you see on that front?
Well, I see a lot of budget pressures. Neither side really seems to want to rein in deficits. We saw that under Biden. We're seeing that under Trump. And they just seem to want to go for it until something blows up. Now, they can't force the Fed to lower interest rates. Trump is trying. But with the current deficit trajectory, particularly if we get hit by another shock, and probably happen at some point, we would need to have interest rates maybe even go up from here in order to stabilize inflation. Obviously, Trump, has little patience for that. But if you read what the progressives are saying, they're not much for central bank independence either. So we're in this period where there's sort of inflation's down. We don't need an independent central bank anymore. And I think we're going to need to get a cold bucket of water poured on us to remind us that we do.
Now, Ken, we're putting up a chart that to me shows potentially one of the most significant geopolitical developments of recent years. This is Bloomberg reporting on cross-border transactions involving a Chinese investor or business. Now, these are Chinese stats. Presumably, this measures trade with Russia, Iran, or others within its orbit. But it shows the share of the yuan, the Chinese currency, is already outpacing the dollar with, again, transactions that have the Chinese entity on one side or the other. Is this a sign that the Chinese are getting traction and chipping away at dollar dominance?
Absolutely a centerpiece of breaking away from the dollars, not only breaking their peg, they've been doing that really more and more aggressively for 10 years, and especially since Russia invaded Ukraine and the sanctions, but it also means developing your own settlement systems, your own clearance systems, because right now the US is really dominant in that, and that means we see everything. We can impose sanctions. So in order to really break away, to have their own orbit, the Chinese want to have things denominated in yuan, but also have their own settlement systems.
Wouldn't that eventually mean that they have to get a little bit more, even more flexible than they've gone? They've been progressively more flexible on their exchange rate, but they would have to go even further in that direction in order to truly become a regional currency.
Well, I think we can expect that regardless, but you don't have to be completely flexible. And by the way, people also say they have to totally open their capital markets. They don't. They need to have a bond that everybody can buy, government debt. You don't have to be able to invest in every Chinese firm. And I think you said it right, Jay. Their goal for the moment is to be a regional currency, reaching out into Latin America and Asia. They're the biggest trader for many of those countries, but sort of initially a regional currency. That's what Europe is. But over time, that'll give them the base to try to expand from there. I mean, we're not talking about the yuan replacing the dollar in the next couple decades. And frankly, it might not happen even this century, but it might.
Some say that the slowdown in the Chinese economy might undermine China's efforts to make the yuan more international. But I was thinking that perhaps that if the Chinese government sees their window closing, that they might actually double down on efforts to try to gain a little degree of security and independence before the windows close entirely. I wonder what your thoughts are on that.
Well, I think they're trying to break away and have their own financial settlement systems a lot more about their ambitions to blockade Taiwan in the South China Sea and knowing what the United States might do. Look, Europe had a terrible century. They barely grew, but the euro did okay. I mean, that developed. It's not China doesn't have to grow at 7% in order to establish the yuan as more of a currency. They're growing. They've already very large. They're the world's largest trading partner for probably more than half the countries in the world. So they're there. They've arrived.
So China's economic development model is really running towards the end of what it promised. You're talking about diminishing returns on infrastructure investments in your book. This, in my experience, draws some really stark similarities to what happened in Japan after its high growth period. What are the comparisons between Japan and China at this moment in China's history?
It really is remarkable. And I talked in the book how the Chinese authorities say, we're never going to be like Japan. We're never going to repeat their mistakes. We're never going to do that. But they have. I mean, they ran into very similar overbuilding and infrastructure, over-reliance on real estate. And even though they don't have a conventional banking system, a lot of the problems are still there. Chinese consumers have most of their money in housing, and housing prices have collapsed. Demand has collapsed. It looks a lot like the financial crisis we had in the United States, that Japan had. But I think the lesson from Japan ought to be that Japan didn't handle it very well. I mean, they contained it. They didn't have a debt crisis, but they had very slow growth. I mean, you're well aware it's for many reasons, but certainly their handling of the debt crisis was a big part of it.
Now, the Japanese also were responding to pressure from the United States to let its currency float in 1985 after the Plaza Accord. And of course, after that, its economy took off as they lowered interest rates to help corporations adjust. That fueled a bubble. It burst in December 1989. The stock market started falling. Do we anticipate, and it took years for Japan to recover from that, will China ever recover from what they're saying right now?
Well, eventually financial crises do end, and the Japanese one is sort of the marathon of all financial crises. It lasted longer as maybe 2 decades or a little more till they started really seeing growth again, only just over the last 10 years. But you know, it's easy to say that you won't do the same thing, but the big mistake Japan didn't make, in my opinion, is they didn't really force write-downs on the debt. They didn't clear the books. No one wanted to lose face. They didn't want to make waves. I don't think China is necessarily going to have that problem, but you know, they're not off to a fast start, we can say for the moment, but they're going to need to clear the books to get credit moving again, and not just to the state-owned enterprises.
So one of our members is asking, what role do U.S. tariffs or other current U.S. policies play in accelerating the decline of the dollar, if any, both in value or as a global currency?
Oh, I think absolutely they do. At a very simple level, if you make your economy more closed to trade, it's less attractive to integrate in finance. I mean, in the extreme, if you're completely closed to trade, you can't be integrated in finance. So it's definitely a step that's a problem. I'd also say the erraticness of the policy, even if we get to whatever Liberation Day is too, and we decide it's over, is it really over? I think the erratic behavior, the discussion in the Senate of taxing foreign investors, people are just more concerned. So there's no question that not just China's moving away faster. I bet if you look at the United Kingdom, if you look at many long-term investors, they're not moving everything away right away. You can't. But definitely at the margin, the erosion of the dollar, which I argue started a decade ago, is accelerating.
So here's a related question. Why do other countries need the dollar to transact? Doesn't the technology exist to allow for direct exchange between countries?
Well, it does, but you need a lingua franca. You need some unit of account. And the dollar has been the universal unit of account, a little bit like English. So technically, you can do the transaction in other currencies, you can list in other currencies. It's just not very efficient. Now, fighting against that efficiency is China, Europe, don't like how much control it gives us. It don't like how much information it gives us. So that's why even the efficient thing would be to have one currency, everything in the dollar. That's not where we're going.
Well, asking a question from another member is asking, can any other currency be considered an alternative to the dollar anytime soon?
Regionally, absolutely. I mean, the yuan is coming, the euro's already there. And I think the euro is going to benefit from this. I'm a Boston Celtics fan, and the New York Knicks beat us this year. We had won the championship before, but our star player got injured, and the Knicks didn't improve, but they won. And I think about the euro that way. It's not necessarily solved its problems, but it's looking better. I look for the euro to have a bigger role in reserve currencies. And if you listen to Christine Lagarde at the ECB and others, they're looking to take advantage of our weakness.
But in order to do that, they'd have to have some sort of fiscal unification, I would think. And they've been talking about that for a long time. Is that going to happen anytime soon?
Again, my analogy of the Celtics and the Knicks. Like if the other team got worse, it lets the team that doesn't have an injury do better, and that's where the euro is. Well, we're forcing some of that on them with forcing them to remilitarize, which, by the way, will also strengthen the euro because if they become geopolitically relevant, and let's understand they're not there yet. They don't just have to spend money, they have to figure out how to unify not just their fiscal policy, but their military. But if they figure it out or go some ways, it's absolutely going to make the euro more important in global trade.
Okay, so we have a couple of questions here related to on the technological front. Here's one. Will cryptocurrency pose a threat to the dollar's dominance? Now, you have a big section on this in your book that was really beautifully written. I wonder if you could answer that one first.
So it absolutely does in the underground economy, that about 20%, maybe, we don't know for sure, but I have estimates, the World Bank does. That's 20 or $25 trillion of global output is not well tracked by authorities. It's already evading detection, and crypto helps you do it. Paper currency has been used for a long time. There are other devices. So already cryptocurrencies have a foothold there. And people who say it's going to be worthless, Jamie Dimon, Nobel Prize winner, Gene Fama, many, many others, they said it's going to be worthless. It's not going to be worthless as long as there's an underground economy. But moving into the legal economy is a different matter. I won't get into it, but stable coins is another thing. I think stable coins, depending on how they're regulated, may well have an era in the United States. A lot of questions about regulation, bank runs, other things, but United States probably is going for stable coins. Europe, maybe its own central bank currency.
So here's another related question. Will the Fed eventually get serious about CBDC? Now, we're talking here about central bank digital currencies. Just wonder what your thoughts are on that front.
Well, my understanding is President Trump's told them not to look at it. It's part of his promoting crypto. It doesn't make sense for the Fed to move first. It makes sense to have New Zealand try it or Canada try it. You don't want to mess up the whole global financial system if you screw up. But I think everybody knows the Bank of England, the Bank of Canada, even Europe, that if it looks like a good idea, we will move in. And a chess saying I use is the threat is sometimes stronger than the execution. So they know we could come in and we have all the technological capability and wherewithal to do it.
So one of our members is also asking about Bitcoin. I suppose this falls into the category you were talking about earlier about crypto. But do you see that having a larger role in currency trading?
Again, underground economy, but otherwise, Bitcoin's too volatile. The transactions pipes aren't that good. There's a beautiful book by Yuval Noah Harari, Sapiens, many chapters which are worshipped in the crypto community, arguing, oh, if we think it's money, it's money. Well, I can only say there are a lot of economists who've worked on this, and it's wrong. Governments have the tools to dominate in the legal economy. They can make you pay your taxes. They can make banks settle in the government currency. They can pay their suppliers. They can create network effects. And they can break the network effects of Bitcoin, even though they can't necessarily break Bitcoin itself.
I'd like to circle back, if we might. For our final audience question here. In Dr. Rogoff's view, how secure is the independence of the Fed?
Not as secure as I'd like to wish. It was a creature of Congress. It was created in 1913 with the cooperation of Congress. The independence of the Fed, which is really a convention, it's not in the Constitution, could be eliminated in a week. Not a good idea. I think it's a good device. But if you got, say, a very big progressive majority, that's an idea which has been kicking around for some time.
All right. Well, we'll be watching those discussions very closely as the president keeps raising this on Truth Social. But as you're watching now, what's the biggest open question in your mind when it comes to the future of the dollar? Is there anything out there that keeps you up at night as we enter this period of higher volatility?
Well, I don't know that it keeps me up at night, but I think that we're probably in for another burst of inflation over the next 4 or 5 years. Our fiscal policy's out of control. The independence of the Fed's been challenged and might take a big shock to push us over. But we saw that happen under Biden, where we had a lot of inflation, and some version of that would not surprise me at all.
Well, that's a sober thought. Dr. Ken Rogoff, former IMF chief economist, Harvard professor, and author of Our Dollar, Your Problem. Thank you so much for joining us today.
Thank you for having me. Thank you for everyone for listening.
All right, our audience has gotten their shot of informational espresso and is ready to tackle the day. Missed a live episode? Catch the replay on our website, LinkedIn, or on YouTube. You can also listen to the Call's podcast edition on Apple, Spotify, or wherever you get your podcasts. Thank you to our members for joining us today. This has been The Call, brought to you by the Global Intelligence Desk.